Let's bring on our next guest, Ryan Detrick. He's with Carson Group, he's the chief market strategist there. Ryan, explain what's happening right now.
Yeah, good morning. Happy Friday and good riddance to February. So there's a lot of ways we can take this. I'll put it like this. What do we know? You guys start off the show with all the uncertainty, and it's real. We knew coming into this month that February is the worst month on average in a post-election year, right? The second half of February is usually rocky, and I get it. Well, why is that? People want to know why. I'd say I'd rather know than not know, and it's clearly playing out. One more thing. The first quarter of a post-election year, where we are right now, is one of the worst quarters of an entire four-year presidential cycle. If my math is right, there's 16 quarters in a four-year presidential cycle. This is the second worst one. So I don't think it's shocking to have this choppiness and this frustration. One more comment on this. The last 5 days, the S&P is down over 4%, right? We all know that. We talk about it. As of right now, looking at futures, financials actually are higher the last 5 days. Yesterday, financials were higher, okay? High yield was virtually flat yesterday. The last 5 days, high yield is up, okay? So if this was a true monster under the bed, we think we'd be seeing more weakness across the board, specifically in high yield. We're not seeing that. This kind of reminds me of early August when we had the yen carry trade unwind. Very scary. Market sold off, but the market truly wasn't panicking. And I think it's similar to what we're seeing right now.
Ryan, you think this is more about the calendar than maybe what's emanating from the White House and concern about policies that are coming?
No, I mean, listen, what I think the way to put it is we knew the calendar was a potential warning, especially when you have a 20% gain. The first quarter after that tends to be choppy. The post-election stuff, February, for whatever reason, tends to be choppy. But we also knew this time, call it 2-3 weeks ago, we saw some advanced decline lines, some internals that were getting a little weak. We've seen some of the defensive areas, utilities and staples, kind of take a little bit of leadership. So again, to us, it's why you stick with the diversified portfolio. How have bonds done the last 5 days? Pretty good. Right? I know bonds have struggled greatly, but this is why you stick with a diversified portfolio. But the bottom line, we're still overweight equities. We do not think this is going to spiral out of control. We don't think we're going to see a 10% correction, right now. We think we're pretty close to potential low, as a lot of guests have come on and talked about. There's some reasons, a lot of fear out there. Individual investors, most fearful they've been nearly in history, yet active managers aren't that worried. Reality is look at the flows, right? There's a lot of outflows from ETFs and mutual funds. We're near that area that we tend to have panic when you're down like 15-20%. We're seeing it 3-4% off the low. So we're pretty close to a low here, we think. And this is just a normal kind of volatility you tend to see in a structural bull market.
Are bonds, Ryan, rallying because of good things happening or because of bad things happening? Do bonds ever rally for good things? The only thing I could imagine, we have had one of the all the president's men. We have one of them on, Kevin Hassett, who says that in his view, the 10-year yield is dropping because of Doge, because we're reining in government spending at least at some point, or better than it was, and that's bullish for the bond market. Or I could just as easily make the case that all these things we're doing could slow the economy, and that's why rates are falling.
Yeah, well, Joe, first things first, enjoy the Oscars this weekend. I know it's a big weekend for you there. But, listen, we know we have this growth scare that's coming in right now, right? And that's kind of some of the rationale for the lower yields. I'll tell you what, though, we're maybe on the lonely camp, if you will. When we look at inflation data, we're going to get more here, in a couple hours, I know. There are still many reasons they think inflation's improving, right? Why has inflation been sticky? Because of shelter, because of auto insurance, and those are real. People pay those. We understand. But year over year, there's an improvement coming. So, Joe, we think, the yields have dropped a little bit because we think inflation is going to be better than people think. And our kind of contrarian take, if you will, market's pricing in about one cut right now. I know some really smart economists are saying maybe hikes this year. We're saying no. We think 2 to 3 cuts this year is probably what's going to be there. We're still overweight equities. Just about a month ago on the Carson team, we actually added some treasuries for the first time in 2 years. We haven't wanted to touch treasuries, don't get me wrong. But we think, again, the market's mispricing lower yields and overall more cuts. But the reality is the economy's still solid. Go ahead. Sorry.
Very, very quickly, they're wrapping us. And I just want to have one more question from you. CPE, if it's hotter than expected today, what's the market's reaction today?
Won't like it, I guess, short answer. But don't forget this. Friday's been very, very weak this year as nobody wants to hold over the weekend. So let's see. But we kind of know the inputs to the PCE already. Should come in at 0.3. If it doesn't, that'll surprise a lot of people. But I think we'll get a pretty positive number. But be aware, Friday's been very weak. We need to see some strength on Fridays before we kind of get out of this choppy malaise that we've been seeing. And I think it'll happen soon enough. Good
I know
March
we got to
coming
go,
here, I
but
think.
I have a different question. Have you ever thought about a career in radio?
Yeah, you've got a great
Because
voice.
that voice, Ryan,
But
honestly,
I think it's also the microphone.
It might be the microphone.
I have a face for radio. I am fully aware. But yeah, I have a podcast, I guess. But no, I appreciate it, guys. Thank you. And here comes a better March. Just leave it at that. But thanks for having me back.